and welcome to Money Control. Well, the market seems to have digested the budget or come to terms with the budget on day one. It was flat, yesterday mildly positive, today mildly negative. But where do we go from here? I have a very special guest with me, Ashish Gupta, CIO of Axis Mutual Fund. Ashish, thank you so much for joining me this morning.
Thank you. Thank you for having me.
Ashish, all smiles this morning. What's making you smile, the Mumbai rains or the markets?
No, I think it's definitely the Mumbai rains. I think we have been starved of rain last month, and I think this month has been a good turnaround. So, keeping fingers crossed.
That is also good from the market perspective, isn't it?
No, definitely. I think this is one part of the economy which is really broader consumption that has lagged the recovery over the past 2 years. And we believe that it's cyclically due for a turnaround. We are all aware that the structural underpinning for the consumption story in India is very strong with demographics, etc. But cyclical factors, post-COVID, high inflation has kept consumption growth muted. But we are seeing some early signs of turnaround in that. And as I mentioned, it's a cycle, it will turn around. Whether it happens in this quarter or the next quarter, that's debatable. But at least some green shoots are visible.
Ashish, the market was expecting the election to be a big pivot point. It didn't happen, and the trajectory pretty much was the same. The next pivot point was supposed to be the budget. Even that has not really made a dent in a sense. Do you see an inflection point at all, or are there any triggers for further upside or any remarkable correction?
So, I think, frankly, to my mind and surprisingly, the market digested the budget quite well, despite the increase in the capital gains tax. I think it is definitely a negative from the market point of view. And for two reasons. One, I think change in the tax rate shows that it is an open item. So it always drives some degree of uncertainty every time in the future, and markets never like uncertainty. The second is that, to my mind, this looks like a first step, right? So 12.5% is a bit of an odd rate. And I would not be surprised this moving up to say 15% February next year. And given that context, I think the market lack of reaction to the budget has been surprising. I think on the macro front, the budget actually delivered a lot, and I think it was a very important budget, given this was the first budget of the new government, first budget with the coalition, and I think uh, 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 in that sense, it allayed a lot of concerns that there is no change in the government stance or policy making, right? So if you look for signs of consistency and continuity, all of them were there, right? So if you see the spend on capex, it was literally unchanged from the interim budget. So capex spend as a percentage of GDP is over 3.5%. It is growing about 16-17% year on year. You look at the bounty they got from the higher RBI dividend, and that was actually used to accelerate fiscal prudence, right? So the fiscal deficit, which in the interim budget was 5.9, has been pegged down to 4.9. And there is a commitment that next year, instead of 4.5% target, they are likely to undershoot that. So I think that is a huge comfort that the macro stability is set to continue. and the government focus, the areas of the focus continues to be similar.
Sure. And do you think that'll change that'll trigger more FII investments in India? Because now the global environment is such that a lot of countries are actually struggling on fiscal front. And India, in that sense, the fact that we are aggressively consolidating, I don't think the
Yes,
markets were really expecting that she will prioritize fiscal prudence, which actually has come as a
yes.
surprise for many. And next year also, the finance secretary seems to be suggesting, even the finance minister said that they want to do below 4.5%, which
Yes,
again,
absolutely.
it should be somewhere under 5.5%, 4.5%. Is that a big plus, and which will change? Will it really help from an FII perspective, or the other factors are more will take precedence over fiscal consolidation in India?
No, I believe this will definitely help. If you recall, just a couple of months ago, there was a rating outlook upgrade that had also come through. So I think the steps that the government are taking, the fiscal prudence that it has demonstrated, is certainly being noticed globally. Uh, how much of that leads to changes in the short term, one cannot be certain because, as you said, there are multiple factors that are at play. What is the global risk appetite? What is the path US government is going to take in terms of its fiscal consolidation and what path the US Fed takes, what happens in US elections. So there are multiple moving parts that will determine
Right.
the flows. But I think the fact that the government is very consistently on its path to fiscal consolidation is being noticed globally.
Fair enough. Earlier on, Ashish, you were talking about consumption being the laggard, which is true. This does this budget have, or did this budget have stuff that gives you the confidence that consumption can come back in a big way?
So, a budget has a few parts that really support it. So, if you look at the announcements around employment-linked incentives that came in, I think that is something that will support consumption. We spoke about the fact that capital gain tax has gone up, but actually all the higher collections anticipated from that is being repurposed to give tax break in lower personal income tax slabs, right? And that number is about 29-30,000 crores. So I think there is an attempt to revive consumption in the budget as well. By itself, is it adequate to drive an upswing in consumption? The answer is negative. But as I mentioned, cyclically, we are at a point of time when the consumption cycle is going to recover. There are signs of rural spending starting to pick up. So I think a combination of these will help the consumption cycle revive.
And from a stock market perspective, how do you view this? I mean, are you at a stage, because all this while the momentum has been in industrials largely,
Yes.
do you go with the same stance into the future, or a rejig of the portfolio will be in order?
Yeah. So there is some degree of rejig that is happening, but actually the industrial space also continues to be very attractive for both from the prospects of what we are seeing in terms of demand and really the capex spend. We spoke about the fact that the government capex spend is up 17% year on year. Of course, it's not a surprise. It's similar to the number that was in the interim budget, but we are seeing definitive signs of pickup in private capex as well. So if you just look at the top 500 listed corporates in India, their capex plans this year are significantly higher compared to the spend last year. So it's not just the government capex that is going up, private capex is also going up. You would have heard last evening one of the largest companies in India spoke about expectations of very strong order book growth this year. So I think the industrial side continues to be on strong footing. If you look at earnings that have come through thus far, so we are still in the early part of the earnings season, the earnings from industrial companies continues to be strong. So yes, while actually there is a revival in consumption, I am not seeing a slowdown on the industrial activity. One pocket that has seen some slowdown is actually the financial sector. So if you look at the past month, both banks and NBFCs have seen moderation in growth, margins, and actually some pickup in credit costs. So incrementally, some higher allocation to consumption could come from sectors like financials and export-oriented sectors.
Okay. And what is your view on government capex itself? Because some quarters of the market were a tad disappointed that the capex spend did not go up, although I think 17% for past year itself is not a mean amount, but the expectation was that that will go to 20-25%. Do you see that getting capped now?
So I actually don't think there were too much of an expectation that there will be a big delta in government capex. I think the pace at which they are spending is strong enough, and frankly, the way the government institutions work. Uh, uh, I'm not even sure that if the government were to allocate a higher spend, it would have actually got utilized. In fact, one of my concerns is that we only have 8 months left, right? So, will actually the government achieve all its targeted expenditure for this year? Because if you see the government capex spend in the first 2 months, and partly due to elections, but first 2 months the capex spend was actually down year on year, and for even this 17% growth estimate to be met, uh, I think for the rest of for the year, there's a 24% year on year increase in spend that needs to come through. So I think the budget is fairly pragmatic and realistic in its estimates, both on the revenue and expenditure side. So theoretically, even if there would have been more allocation, I think government would have been hard pressed to actually spend that much money.
Sure. Ashish, I think we'll sort of wrap this interview right here because the audio is really poor and I just can't hear anything that you're saying. The voice is cracking badly. But thank you so much for your time this morning. We'll have this conversation on telephone and maybe put this interview out on Moneycontrol sometime soon.
Okay, sure.
Thank you so much.